So much for the China pump that we're all expecting today. It really turned into a bit of a nothing burger, but this is actually the start and it was actually never going to pump today. We have so much to cover today. I just want to jump straight into CoinGecko. You can see we're down a little bit, 1.18 trillion, pretty much sideways for the last couple of weeks with the market cap, a little bit up, a little bit down. Before we get into the China news, let's just check out the charts here. Bitcoin 26,942, up nearly 1% the last 24 hours. You can see it has been very volatile, and this is going to continue probably until the next Fed meeting, which is on the 14th of June. So about 2 weeks away, we're looking for some very volatile times in the crypto market. Ethereum 1879. Same deal here, up, down, sideways, back up again. So let's jump into what's going on with China and why has it turned into a bit of a nothing burger here? The number one thing to consider is this line: Hong Kong Securities and Future Commission, SFC, will begin accepting applications for crypto trading platform licenses on June 1st. This is when they open up applications, not when money's going to start flowing in, but we've got a lot to cover in regards to Hong Kong. Austin Clark, my man, if you're not following this guy, I'll link his videos in the description below once we finish here. So Hong Kong retail crypto trade move is a very big step. This is by Justin Sun. The crypto mogul thinks this will help turn China's digital asset fortunes around. China's going to be absolutely massive, ladies and gentlemen, but it's not going to happen overnight. With crypto, with trading, we need long-term patience, a long-term time horizon. Short-term, up, down, or sideways, and it's going to be insane for the next little while. But this is a very big step for crypto in China. So Huobi will begin onboarding Hong Kong residents on Thursday. The Hong Kong Monetary Advisory has said crypto firms can onboard customers during an 18-month grace period during which they will be expected to secure proper licenses. Hong Kong is allowing retail traders to buy and sell cryptocurrencies in a bid to rebrand the country as a digital asset hub. I think this is a very big step for crypto in China because this is, of course, the first jurisdiction in China to legalize crypto trading. And we've seen this has been experimented on for the whole China crypto operation. Hong Kong's the first to roll it out. Will it go to mainland China? If this comes off the way we expect it to, I believe so. Obviously, it allows the Hong Kong and Chinese people to stack up on Bitcoin, cryptocurrency. It's only the top 30 really they'll be allowed access to, but that's a lot more tax revenue for the governments as well. So I don't see why not. With America's stance, which we're going to get into very shortly, if America's going to push crypto out of the US, China's probably going to take the other side. So its new laws say that individual investors will be able to buy and sell bigger digital assets like Bitcoin and Ethereum. This is really big and it's not approved yet, but most likely it will be. First Digital unveils USD stablecoin as Hong Kong crypto rules kick in. First Digital Group announced today that it's launching a USD stablecoin, FDUSD, FDUSD. In other words, FDUSD is backed by high quality reserves in cash and cash equivalents and regulated financial institutions around Asia, and will be issued by First Digital Trust, a trust company registered under Hong Kong's trust ordinance. Stablecoin's not going to happen overnight in Hong Kong. As the stablecoin launches, it won't be available to retail users in Hong Kong. And this is why. Regulators in Hong Kong have said that stablecoins should not be allowed for public trading by retail investors until the proposed rules for this asset class are officially implemented in the territory. Hong Kong Monetary Authority, the Special Administrative Region Central Bank, one of its financial regulators, are weighing new regulations for stablecoins. This is important. It could mandate local incorporation, require real-world asset backing, disallowing algorithmic stablecoins. That's good. We've seen algorithmic stablecoins haven't worked. A lot of people have lost a lot of money with that. So I think that's a good ruling there, and mandating separate operation for issuers and virtual asset exchanges. It is what it is. Just talking about stablecoins really quickly, overall the market cap for stablecoins has dropped dramatically over the last year since Terra Luna's collapse. But it's not all over. Tether has really climbed to all-time highs at 83.2 billion as the stablecoin market shrinks, reached 83.2 billion market cap, recovering all the losses since the implosion of blockchain Terra more than a year ago. Stablecoin issuer Tether USDT has regained its previous all-time high market cap despite a shrinking stablecoin market. A little bit contentious why they've been raising, because money hasn't really been flowing into crypto. People haven't been taking the profits due to where we are in the cycle at the moment. It has recovered all of the 18 billion it lost since the dramatic implosion of blockchain project Terra in May 22 following the market rout. Tether's milestone is significant and it runs counter to a 14-month stablecoin market decline. Pretty much the whole bear market. Stablecoins are 129 billion subset of crypto and key plumbing and blockchain-based finance, bridging government-issued fiat currencies with digital assets and facilitating trading. I've put this article in the description below. If you scroll down a little bit, you can read here about their lack of transparency as well. This is the news with the fast facts, so we won't go into it. But there is a bit of suspicion as their market cap surges because it's inconsistent with the plunge in trading volumes to multi-year lows. Just keep that in mind. But on to brighter news here. Jason Pisano, I've linked this guy's Twitter. You need to follow him, watch his YouTube videos. Another one like Austin Clark that you should be following. Now, Jason, very level-headed. Long-term bullish, short-term very realistic, but the disbelief phase is in full swing for stock markets. S&P 500, another highest daily close for 23. NASDAQ 100, also highest daily close in 23. VIX just starting a trend in sub 1117 bull zone. Bitcoin maintaining price above macro support. Europe has been leading the charge. DAX, CAC, FTSE, and all are taking a break from a relentless 18 months of higher prices. Recession announcement in Germany and the DAX is barely down 3% from all-time high. The UK has gone up for 3 years. It didn't even have a bear market in 22. Expects the US markets to also take a break, but not for long. October 22 and probably March 23 lows will likely hold, aka the macro cycle low is in. Please forgive me, ladies and gentlemen. I have the flu at the moment. It's not going real well. But with so much fear in the market, especially yesterday, everything was red. Check this out. Everything is nice and green today. And my goal, every time there's a red day with the projects I like, that's the time to be able to go back in and stack up. Looking forward to next year after the halving. Now, the debt ceiling deal, let me just bring up a better screen for you. I don't know why this is zoomed in so funny. Here we go. So the debt ceiling deal, US House overwhelmingly passes the bill. Obviously, this was all just a show, posturing. They need to make it entertaining. And there's a video, Alot Trades video, you have to watch that from yesterday. Jerome Powell talking about how they need to put fear into the markets forever. And I know this writing's going to be very small. Hopefully that's a little bit better. The government is forecast to hit its borrowing limit on Monday, the 5th of June, which leaves little margin for error to avoid the US defaulting on 31.4 trillion in debt, which underpins the global financial system. If that was to happen, it would be catastrophic. It was never going to happen, and they just need to be able to throw a left and a right jab to each other. The agreement, this is the craziest part. It suspends the debt ceiling, the spending limit set by Congress, which determines how much money the government can borrow until the 1st of January 2025. Unlimited, obviously, spending needs to be approved by Congress. Last line, what a joke. It's all a farce. Now, this is flipped. We were looking at having an interest rate hike June 14 for the meeting. Investors have switched over, 73.7% probability that it won't happen. I dare say, and we'll get into a couple of articles as well, why it still could. They are talking about higher for longer. Maybe they pause and then the next one they raise it. If they do pause, it's going to be really bullish short term, and we probably will see a nice pump in the markets if that is the case. But it could get a little bit worse short term as well. So make sure you hit subscribe. We will keep you up to date with the news and the fast facts as this changes. It is changing dramatically. Now, I'm not sure if this is a good or a bad article. I'll let you decide what you think about it. The US Commodities Agency may change risk rules to consider crypto. The CFTC has proposed an overhaul of risk management requirements, and one commissioner says it should factor in emerging crypto dangers. Sorry about the buzzsaw out there. We're getting a new fence put in. It's the quietest they've been all day, so I wanted to go live. Romero said in a statement that technologies like digital assets, AI, and cloud services also have emerged as areas that can carry significant risk. These technological advancements with their accompanying risks necessitate the Commission revisiting our reg oversight, including our risk management requirements. Goldsmith said, integration of digital assets with banks and brokers and the risk that could be posed could continue to evolve. At the end of the day, I think regulation's a good thing. They just need to go about and consult the community when they do it. Having the right regulation will bring in institutional investors and bring crypto back to the US. But I think that cat's gotten out of the bag, and it is full steam ahead worldwide now. And China, the UAE, the EU are really taking the opportunity to be able to take market share away from the US here. And Asia is going to be a massive catalyst after the 23 Bitcoin halving here. Shout out to Maniac in the comments as well. Good day, mate. So treat crypto as securities by default. This is the European Parliament, as study says. Obviously, we've talked a lot about MiCA here on the channel. Landmark new crypto laws under MiCA may have few short-term benefits without further steps, the report commissioned by EU lawmakers said. Crypto assets should be treated as securities by default, and the autonomous organizations that govern DeFi should be granted legal status. I think that's quite interesting. The report comes as the European Union finalizes its MiCA regulation and considers whether a sequel will be needed to cover extra areas like DeFi, staking, and NFTs. All crypto assets should be deemed a transferable security, implying they would fall under the EU's tough governance and authorization rules that apply to traditional stocks and bonds, unless and until a national regulator says otherwise, the report said. Pretty interesting. Let us know in the comments below what your thoughts are on that. I think the MiCA laws overall are good, and with any regulation, there's going to be a little bit of good, a little bit of bad. This is what's coming up with the jobs data. We're still waiting for the report. It's Friday here in Australia. I believe I've lost track of days with the flu, so this should come out tonight for me. And Friday for everyone in the US. Inflation concerns, strong jobs data put Bitcoin on the defensive. A strong May jobs report on Friday could set the crypto up for further declines. I don't really see a compelling reason to pause, meaning wait until you get more evidence to decide what to do. This came out the other day. We talked about it. Federal Reserve Bank of Cleveland President Loretta Meester in an interview with the Financial Times. Big article here, but among upcoming data points of interest will be Friday's non-farm payrolls data. Current forecast for the economy to add 180,000 jobs in May. A reading above 180,000 would likely have a bearish impact on prices. On Monday, I'll keep you up to date with that. And we've still got about 2 weeks until the Fed meeting and what they do. For me, 50-50. The whole time I've been saying it's very likely that they raise interest rates, and I'm not ruling that out in the slightest, even though the market is starting to. I do have a feeling the Fed to be able to help out the US to be able to raise that $1.5 trillion wants to see the market suffer a lot of pain short term to push everyone into bonds and to bring that interest rate down for the US government. So I'd be very skeptical about especially if you're trading on leverage at the moment, if you don't know what you're doing. Again, jump over to Austin Clark, and he goes live every day with his trading. I think great show worth watching, as well as Jason Pisano. USDC issuer Circle has ditched all US treasuries from 24 billion reserve fund amid the debt ceiling showdown. So the markets really don't know what's going on at the moment, and they are being very cautious. The stablecoin issuer now only holds cash and repurchase agreements to back its USDC stablecoin value. Stablecoin issuer Circle Internet Financial has ditched all US Treasury bonds from its USDC coin back in reserves as part of precautionary measures to protect from a potential fallout from the looming US debt ceiling showdown. This is pretty interesting. I'm sure we all know, but the Circle Reserve Fund is managed by global investment giant BlackRock. BlackRock owns the world. And maybe in an upcoming video, we'll go into the Fed, BlackRock, Bank of International Settlements, and how bankers actually rule the world worldwide, not just here in the West. The milestone is a result of Circle's attempt to protect the 29 billion USDC stablecoin from potential turbulence on the bond market, while US lawmakers are scrabbling for a deal to avert a government default. It's an interesting time in crypto. Like I said at the start, just because China and Hong Kong didn't pump today doesn't mean it will. It just allowed them to start operating today, to be able to get in their applications, to be able to provide the on and off ramps for all the investors out there. Hong Kong owns, if I'm correct, like 18% of the world's wealth. And maybe that number's off, don't quote me, but it's absolutely massive. A lot of money will flow into crypto from Asia, Hong Kong. Chinese residents, if they have residency within Hong Kong, will also be able to use these services to buy, sell crypto. With the rules in Hong Kong, they will be able to take it. They're not allowed to buy DeFi tokens and such directly, not through these exchanges, but they can take self-custody. Once they have it in self-custody, honestly, they can do whatever they want. So the whole crypto market long-term is going to benefit by this so substantially. It is going to be an amazing time. 24, 25 is going to be unlike anything we've ever seen before. In the meantime, it is going to be very, very volatile. Never invest what you're not willing to lose, and just really quickly, obviously, it's not financial advice. But hit subscribe if we vibe. Have a beautiful weekend when it comes around for you. I'll see you Sunday if you're in America, Monday over here in Australia. Be blessed. Peace.